In this video, I'm going to be going over my current day trading strategy and the tools that I use to day trade. So first off, from a platform perspective, I'm currently using Tradevate as well as Quantower. With Tradevate, I use the Tradevate brokerage, and with Quantower, I use AMP. The reason that I like AMP with them is that they actually give you the Quantower platform in a white labeled version, so you get to use it for free. For most of this video though, I'll just be showing Tradevate, which is what I do show on stream as well. If you didn't know, I do live stream my trading sessions, my morning trading sessions here on my YouTube channel. So make sure you subscribe, turn on those bell notifications, and come hang out at Market Open Monday through Friday. Diving in, I'm going to be looking at my different strategy from a top-down perspective here. So we're going to be looking at how do I find the trend at 8:30 a.m. Central Time and the tool that I use for that. Next, we're going to be going into volume and how I use that to potentially find entries as long as it aligns with the trend that I established. 3, going into actual entries, what I look for across the different charts. The tool that I use to find trend is actually called Rocket Scooter. It's linked down below if you want to follow along. It's got a free trial for a week. There's discounts as well. But if you want to check out the free trial, it's linked down below. I look at 2 big things here. Thing number 1 that I'm looking at is the liquidity map here. This is from Friday for a little bit cleaner view. This is Friday at 8:30. I took a screenshot of this and it says BLU. This is what they call their liquidity map. It has all of the codes that might pop up and the price action that corresponds with it. The way that they have outlined all of this is due to the options flow. They're looking at options data and how dealers are positioning their options plays. So again, we're looking at the SPY in correlation to the ES. We see BLU. And so BLU here looks and means that we have longs across the board, a long off the open or a long off of the blue line, which they call hedge pressure. So if we go back to Friday, you can see here we had a nice long off the open. We also had a nice long off of hedge pressure right at 402, which it can be seen here, 4243. Right off that line was another beautiful long on Friday for a really nice rip the rest of the day. The other piece of information here for trend detection is this DD number up here. This number does not change as the day moves on. What this number does is it tells you the bull or bear bias for the day. So it goes on a scale of 0 to 1, which 0 to 0.5 is bearish, 0.5 is neutral, and 0.5 to 1 is bullish. So today we're at 0.84. On Friday we were at 0.85. And so 0.85 on the DD with us coming back down to test hedge pressure is a really nice long potential setup, which is exactly how that played. Now today, you're going to see BRSU, which if we look at the charts, that's showing some downward pressure inclination off of hedge pressure. But you'll notice that today we actually cracked through hedge pressure right off the open. What Rocket Scooter tells us is that that now becomes what they call an irrational day. This means that you should basically be walking away or sizing down significantly, taking much tighter, smaller trades. You're not looking for that huge move like you would have on Friday. Instead, today you're looking for very tight trades, if any trades at all, because the market's now considered irrational. What irrational really means is that anything can happen at any time. You're going to see lots of movement probably still, big sliding movement, not a ton of volume potentially, and just a lot of fake outs and trapping action. So those are the 3 things that I'm using Rocket Scooter for right now. Again, lots of things here to be using in the future. They have like a cool scanner for options if you play options and things like that. But for me, it's really trend detection. Looking at DD, if DD is above 0.5, leaning bullish. If it's below 0.5, leaning bearish. Looking at the liquidity map and how the liquidity map, the letters actually apply to the different scenarios that we're seeing. And 3, if hedge pressure is cracked, the market is now considered irrational and I should be taking a step back or at least downsizing significantly, maybe going to micros, etc. So that brings us to our actual Tradevate screen now we know the trend, etc. So I use a 5-minute chart, a 22 range on the NASDAQ, a 6 range on the ES, and daily charts. On Quantower, I've actually been experimenting with a 30-minute chart, a 1-minute chart, all on the same screen, and a 5-minute footprint chart. So all of these are for the ES. It allows for kind of a bigger picture and then going into the small picture all at once. So when I'm on my 5-minute charts, I use a lot of volume-based trading. You can go, I have tons of videos on my channel, so I'm not going to go super in depth on all the volume-based stuff, but I'm very big into volume-based trading. What that means is I'm using VWAP, volume weighted average price here, which is my light blue line. I use the volume histogram. This histogram is showing volume from the 5 o'clock open. So I'm looking at all the volume that's been conducted since the open. And then I'm looking at volume profile since 8:30, since market open Central Time, with these 3 lines, which is value area high, value area low, and point of control. And it typically acts as like a nice support line. And using it from yesterday as well also acts as a nice support or resistance line. So here you can see we rejected value area low on the ES from Friday, because today is Monday, and we had a nice rotation back down. The volume histogram on the right side, I used it as support and resistance. So, you know, areas where there's a big volume and then no volume and then big volume again, price will typically float very quickly through those areas. And we can see that a little better on the 22 range. I like to find entries on the 22 range or the 1-minute chart. Again, kind of taking a top-down approach of big picture, middle picture, small picture to find an actual entry. On the 22 range, the things that I'm looking at, I have my VWAP here, which is the yellow line on the 22 range chart. And then I have standard deviation bands. These are plus and minus 1 standard deviation, 1.5, 2, and 3. It really just allows for like a visual of potentially a point of interest. Or if we're truly trending up or down, a lot of times it will act as a channel of trend to the downside or to the upside. Maybe it's between the 1.5 and the 2, or the 2 and 3. On the 22 range, I'm really looking at cumulative delta and volume over here on the right side. So one thing that I'm looking for is delta divergences. And what is delta? I guess is probably the first question that should be asked. Cumulative delta is the change in market buyers versus market sellers. So if there's a bunch of market buyers, meaning more market buying than market selling, you're going to see upticks on delta. If it's the reverse, you're going to see downticks on delta. You can see here we made new lows. We kind of chopped it a little bit. Delta actually stayed up as we made new lows on the NASDAQ. So that's the very first delta divergence. Typically a sign of a reverse in some capacity. We did have a nice rip out of it and then a test back down of the prior low range. And that's where we see the really big delta divergence play out right here. So as we came back down very close to new lows on the day, delta did not have hardly any movement at all. And then a really nice move out of this delta divergence. But that's an example of a delta divergence. You'll see these playing out all the time. Maybe you do some homework and you go through market replay and you wait and see delta divergences, you mark them, and then you see what happens with price action afterwards. Now that we actually know potential entries and exits being at volume or points of interest, right? Homework is to go into replay and poke around with all these different concepts, go into a market replay, a simulated account version, and play around with these concepts. Take bits and pieces of it or all of it if it works for you, bits and pieces, combine it with other strategies, and I hope that you're a profitable and successful trader. Stick with it. See you next time.